Meantime, I want to get over to J.J. Kinahan to continue this conversation right now. Chief Market Strategist at TD Ameritrade. Also, Mike is joining us now on at the table here. J.J., are you in the Paul Tudor Jones camp of, put everything down on the table, do nothing until we get a better grasp of what's going on here with this coronavirus? Do you look at this as a, dare I say, buying opportunity? How do you play this?
Well, I think, first of all, Andrew, if we can hold this 3240 level on the S&P 500, Mike just got done talking about it a bit, I think that that's very good. Now, I don't think I'd certainly be going in and buying with both hands right now, because that is probably not the smartest thing to do till it plays out a little bit. But as Mike said, I do think it's part of a normal sell-off. We've had a pretty amazing start to the year. You look at things like healthcare sector up 14%. They had a rough day on Friday. But, overall, I think that with earnings also, some of these earnings stocks may make some statements that, with Apple, AT&T, Starbucks all going this week. If they could give some good forward-looking statements, this could be a great opportunity for buying. That said, I'm always a believer, and particularly for retail traders, that you should be a partial buyer at any time. You don't want to be both hands in, and I think doing something like that is just foolish at any time, but particularly when you have such a big unknown. I think the funniest thing actually for this week, Andrew, is the Fed's going to have a meeting this week, and it's probably a tertiary story for you guys with everything else going on this week.
Mike, what's your sense in terms of earnings later this week? Because I think J.J. brings up a good point, which is if the earnings are very, very positive, maybe this train continues the ride it's on.
I think there's a chance of that. Earnings, the early indications are pretty good. In other words, expectations are low enough. The issue is the market ran up 11% in a straight line. So I think it's a matter of the reactions, what the setup is for something like the very big NASDAQ stocks you're going to start to hear from. They've certainly built in a pretty good first quarter. It's not really about that. I also think it makes sense to ask, why is the market reacting to, because everyone keeps passing around these historical examples, right, of other diseases, outbreaks that did not really end up being consequential long-term for the market. It's because the market needs the global economy to have an upswing. Right. And that's the thing that's now in jeopardy when the Chinese market, obviously you have all these trade and travel restrictions. That's the issue right now. And that's why I think it's just this instinct of let's pull risk off the table, because guess what? We were gorging on risk, and everybody was, at least the professional community, very, very bullishly positioned going into this.
JJ and Mike, I'd ask you to weigh in on this Boeing news this morning. We have two issues here. One is the coronavirus, what that means to airlines and what that means to airplane makers and all the whole sort of complex. And then there's this second issue of this plane reportedly going down in Afghanistan, but Boeing saying it didn't, and it's very hard to make sense of what any of this really means.
Yes, very hard to make sense of what any of it really means. I do think that the market has, if you look at the way that Boeing has traded the last couple of weeks, it's started to pull back the benefit of the doubt from Boeing and has essentially said, okay, we held the line on this for a while thinking this was a comeback story, and now we're just not sure. So we have to be very careful about assuming we know how this is going to play.
We'll look at that stock down about 1.5% this morning, but that would be almost in line with what's happening in the broader markets. This is not necessarily a reflection of something else.
I think it's amazing how well Boeing, to Michael's point, has held in the last. It seems like they have nothing but bad news, yet they still seem to recover. People don't want to sell the stock en masse. And I think the other thing that's being affected this morning, Andrew, that's been an amazing story over the last 2.5 weeks has been crude oil. 2.5 weeks ago, we're talking about maybe a 65 handle on crude oil as it's starting to threaten there. Now you're talking about 52.65 as we head into this morning. That's actually been one of the most volatile trades all year long. To your point about reflecting, bans on air travel, et cetera, it's the area that's really taken it the hardest over the last week or so.
Where are we, Mike, in the debate about how expensive the market is or isn't, especially when we watch the 10-year yield keep dropping?
I mean, the market certainly got to its pretty much highest valuation of this cycle, but not really out of line with where bull markets eventually get to when inflation is at this level. Interestingly, bond yields are supportive at these low levels of equity valuations. However, only if the credit market also kind of signs off on it. And so, in other words, corporate bond yields have been an amazingly strong part of all this. Now, they've been softening up and just in the very, very recent, last few days. So that's something to watch. And I obviously think that you came into the last couple of weeks with the highest valuation and sentiment situation in 2 years. You have to kind of work that out.